What if the most important investment of the next decade is not a stock you can buy directly? Data centers are becoming the new oil. And there is a $527 billion reason why. In 2026, the tech giants will spend more on AI infrastructure than the entire GDP of Costa Rica. Today we are breaking down exactly where that money is going and how you can profit from it. Let us get into it. Here is the number that changes everything. $527 billion. That is the combined capital expenditure on AI infrastructure announced by the 5 biggest tech companies for 2026. Amazon is spending $105 billion. Microsoft is at $80 billion. Google is at $75 billion. Meta is at $65 billion. And Oracle has committed over $30 billion. To put that in perspective, global AI investment doubled in 2025 alone. Private AI investment grew 127% year over year. This is not a trend. This is a supercycle. Here is what most investors are missing. Data centers consume massive amounts of electricity. A single large data center uses as much power as 50,000 homes. By 2027, AI data centers could consume up to 7% of all U.S. electricity. The power grid cannot keep up. In Northern Virginia, the world's largest data center market, utility companies have stopped accepting new connections because the grid is at capacity. This bottleneck is creating opportunities in unexpected places. Power utility stocks are surging. Nuclear energy is making a comeback. And natural gas is seeing demand it has not had in a decade. The backbone of every data center is the chip inside it. NVIDIA currently dominates with over 80% market share in AI training chips. Their Hone Blackwell architecture has been sold out for months. But AMD is fighting back. Their MI300 series is gaining traction with major cloud providers. Microsoft and Oracle have both placed large orders. The key metric to watch is data center revenue. NVIDIA's data center revenue hit $47 billion last quarter. AMD's data center revenue reached $3.5 billion. There is a gap, but it is narrowing fast. And both benefit from the CapEx supercycle. During the gold rush, the people who got rich were not the gold miners. They were the ones selling picks and shovels. The same logic applies to the AI infrastructure boom. The real money is in the companies building the infrastructure, not the companies using it. Data center REITs like Equinix and Digital Realty are seeing record demand. Power infrastructure companies like Eaton and Vertiv are growing fast. Networking companies like Arista and Broadcom are essential. And cooling companies are critical because AI chips generate enormous heat. Liquid cooling is becoming a must-have, not a nice-to-have. We ran the numbers through Kronos, our AI prediction model. Here is what it is calling for the next 30 days. NVIDIA has a predicted upside of 10.2% with 71% probability. The semiconductor cycle and Blackwell demand create a strong setup. AMD shows 5.9% upside with 65% probability. The market share gains are real but not yet priced in. Equinix shows 4.8% upside with 62% probability. Data center REITs benefit from the supply constraint. Vertiv shows 8.3% upside with 68% probability. The power infrastructure play is still underappreciated. And Eaton shows 6.1% upside with 60% probability. Diversified electrical exposure with data center tailwinds. But there are real risks. First, the power grid bottleneck could slow down data center construction. If companies cannot get grid connections, their CapEx plans get delayed. Second, chip export restrictions could disrupt supply chains. The US-China tensions affect NVIDIA and AMD directly. Third, AI model efficiency is improving faster than expected. If models need less compute, demand for data centers could plateau. Fourth, interest rates matter. These companies are borrowing billions to build. Higher rates mean higher costs. And fifth, there is always the risk of overbuild. Tech companies have a history of overinvesting during boom cycles. Here is the timeline to watch. First, NVIDIA earnings in August will be the biggest catalyst. Their data center guidance sets the tone for the entire sector. Second, Amazon, Microsoft, and Google earnings will show actual CapEx spending versus promises. Third, power grid interconnection queue data will reveal whether construction is on track. Fourth, AMD market share updates will show whether the competition is real. And fifth, keep an eye on data center vacancy rates. If vacancy drops below 1% in major markets, pricing power surges for REITs. Each of these data points tells you whether the supercycle is accelerating or slowing down. Here is the bottom line. The AI infrastructure boom is the largest capital expenditure cycle in technology history. $527 billion is not a rounding error. It is a structural shift. The pick and shovel plays, NVIDIA, AMD, Equinix, Vertiv, Eaton, offer direct exposure without guessing which AI application wins. But remember the risks. Power constraints, geopolitics, and interest rates matter. Diversify across the infrastructure stack, and pay attention to the leading indicators. The data does not lie, but the market moves fast. So stay informed, stay disciplined, and as always, this is not financial advice. Do your own research. Are you investing in the AI infrastructure boom? Which plays do you like? Drop a comment below. And if you want more data-driven breakdowns of the biggest trends in AI and finance, hit that subscribe button. We analyze every number so you do not have to. See you in the next one. This video is for educational and entertainment purposes only. It is not financial advice. Past performance does not guarantee future results. Always do your own research and consult a qualified financial advisor before making investment decisions.